Welcome to Kalong Publishers video teaching series, where we bring new and real-world experiences to your learning space. Our video teaching series is designed to expand your access to subject content, to creatively engage you in learning and enhancing your self-study abilities. Principles of Accounts is the first subject in this series. Take a moment to review information on assets and liabilities on pages 42 and 43. Review also use of appropriate stationery on pages 9 to 14 in your Kalong Principles of Accounts for CSEC text. Let us continue our discussion on the General Journal. Join your facilitator, John Tracy.
I indicated when we were doing the day books, the sales and the purchases, etc., that it was an easy matter just to record. And it took you probably a half minute to make that record and to understand what was happening. The journal is a little bit more technical. Not difficult, just technical. So we would have recorded what? The date? Would have identified the item that is to be debited. And in this case, that item would be the what? The motor vehicle. Yeah. That would be debited. And they would have identified the item to be credited. A journal entry has 4 parts. 4 parts to the journal entry. The parts include
the date.
Every time. Right? The date. Secondly, the item to be debited. Thirdly, the item to be credited. And in addition to those 3, it has something which we call the explanation. In the accounting jargon, they call it the narration, which is just a note to explain what you have recorded or what you have done. Let us see if we can now record that particular transaction, purchase of the motor vehicle. The date was
18th of December.
And what you look for next, the item to be
Debited.
And that item is what?
Motor vehicle.
Motor vehicle. And the value was
$2 million.
$2 million. So you have identified what? 2 other things which make up a complete journal entry. Then the next thing we do, we try to identify the item to be
credited.
And the item to be credited is Stuart Motors. And the amount is
$2 million.
$2 million. Because they have to be the what? Same. Whatever you amount is debited, that amount has to be credited as well. With me? Then comes the narration. Now if I told you that the narration is really to express what is it that we have recorded, what is it that we have done, what was the transaction, what would be an appropriate narration? An appropriate narration would be to record purchase of motor vehicle. Wasn't that what we recorded?
Yes.
Right. When you look at some textbook, especially the traditional textbook, they have a nice way of putting it. Being. Don't know why they start like that. But being the recording of the purchase of motor vehicle. But all that we have done is that we have recorded the purchase of motor vehicle. So that would be the narration. So we have a complete what? Journal entry. So this is more involved than when you record it in the sales book or the purchases book. Let's just reiterate what we are doing here. You notice what I did when I record, I don't know if you notice it, when I record the credit entry, what did I do? I indent it to the right. That's normal.
Yes.
So journal entry come with a certain what? Structure.
Structure.
A certain format.
Mat.
So I indent the credit entry. And that completes a journal entry. Now, a journal entry is not complete without the narration. Without the why you think they need narration in the general journal to make journal entry? And I'll give you an essential reason. One, journal entries are used to record unusual transactions. In other words, it's not the everyday, run-of-the-mill type of transaction. They tend to be unusual. And because they're unusual, you want to what? Remember what it was. So therefore, the narration helps you to remember what that transaction was about. Clear or not?
Yes, sir.
So when you look in the purchases book, everything in there is purchases, so you don't have to worry yourself. But in the journal, it's a variety of things. So you need to specify and to describe what is it that took place. In your response, you told me that the general journal is used for opening entry. It is used for adjusting entry. It is used for correction of errors. And we have just shown that it is also used for the recording of non-current assets. That's a number 4. Recording of non-current asset. Just as how you told me that the journal is used to record opening entries, it means that it also is used to record closing entries. It is used to record adjustments. It is used to record correction of error. At this point in the series, you might not even know what correction of error is, or you might not even know what adjustments are. But when we come to those areas, you will see that when we are correcting errors, we're going to use the journal entry. When we are doing, you follow?
Yes,
and when we are doing adjustments, we are going to use the journal entry. When we are doing opening entries, we're going to use the journal entry. The general journal, therefore, is a critical original book. It has its peculiarities. It is structured differently. How the information is recorded is also different. So it takes a bit more effort to record in the general journal than it is to record in the other original books. Having said that, turn to page 9, from 9 to 14 in the text. And you will see a series of stationery. And the reason why I mention that is because sometimes in the CSEC exam, you are provided with the stationery. And one of the stationery you could be provided with is the journal sheet. And you're asked to make journal entries. Now, if you're not practiced in the using of the stationery, you'd have a difficulty. So once we're talking about journal entries, get as much practice as possible in using the appropriate stationery. As is ruled up here, as is recorded here, and make sure that you have it at your fingertip. In that section that I refer you to, there are several other stationery that you will find that you have to use. Now, this particular stationery that is used for the journal can also be used for other things. And when we come to those other things, we will point them out. Let me give you a transaction. At the beginning of the year, X company has some assets and it has some liabilities. A list of assets, a list of liabilities. if you were asked to journalize, because that's the beginning of the year, so those will be called what? Opening entries. If you were asked to journalize that information, the assets would be recorded on the debit, and the liabilities will be recorded under
Credit.
credit. That's what your opening entries are about. But you know, if all your assets, giving you a maths problem now, if all your assets total $20,000 and all your liabilities total $14,000, it means that your assets are not equal to your liabilities. And in accounting, things have to remain in balance. So the point is, when you are given a list of assets, list of liabilities, and you total them and find that the assets are more than the liability, the missing figure is going to be what?
Capital.
Say that again.
Capital.
Good. Good. Because things must remain in balance. So the general journal is a very useful book in the accounting system. Can someone please tell me one major advantage of journal entries?
I can to help eliminate and detect errors.
That's correct.
Okay.
And that's an important activity in accounting, because errors are made. So there is fraud, and the journal entries can assist in tracing back and in detecting the fraud or in discovering where the error was made. So as a book of original entry, it is critical that we are able to what? Record in the general journal, which is a bit more what? Not tedious, but a bit more technical when compared to the other books. In the next session, we'll be introducing the last two books that we are going to be looking at, which is the petty cash book and the main cash book. Once we call one petty, we have to call the other one the main cash book. And that is where we will pick it up in the next section.
Take a moment to review the structure of the cash book and the petty cash book on pages 12 and 13 in your Carlong Principles of Accounts for CSEC text. This teaching series is a production of Carlong Publishers Caribbean Limited.